Hi, my name is Arush Patel, and I'll be presenting Constellation Energy as an independent research reporter coming out from Doherty Valley High School. Let's take a look at the overview of Constellation Energy. If you'd want to find this on the Yahoo Finance app or anywhere on NASDAQ, you'd type in CEG to find the stock and anything about regarding its financials and data. As for the sector it pertains to, as the name suggests, it pertains to the energy sector with a major focus on nuclear energy and renewable energies that don't produce any carbon emissions during the process of actually producing the energy. And if you want to contact investor relations, I've linked the email as long as provided the phone number for you to contact them. But overall, throughout my financial analysis, I would recommend Constellation Energy to any investor and persuade them to actually buy it with a target price of $261.57, with the current price currently being, as of March 28th, $205.39. Founded in 1955 and based in Maryland, Constellation Energy Corp began operations as an energy provider. In 1999, following a share exchange, it became a holding company for Baltimore Gas and Electric. And if you'd want to find that on the New York Stock Exchange, you would put in BGE as a ticker symbol. And after that, officially launched its own CEG stock on the New York Stock Exchange. The company focuses on sustainable, clean energy solutions, utilizing nuclear, hydro, solar, natural gas, and oil for energy production. With a workforce of 13,000 employees, CEG supplies power to homes, government entities, and commercial customers, aiming to contribute to the fight against the climate crisis. As of quarter four of 2024, Constellation Energy reported a total revenue of $26.4 billion. During the same time period, CSI Market estimated that CEG held a 2.55% market share. Compared to other energy corporations, it maintains a strong position, outperforming American Electric Company and CenterPoint Energy with respective market shares of 1.39 and 1.06%. However, it still trails behind Berkshire Hathaway with a 44.42% market share and PGE and Corp, which has a 2.78% market share. According to Energy Digital, Constellation Energy supplies 10% of the total clean energy on the US grid, serving 16 million homes and businesses, including half of the Fortune 500 companies. CEG stock is rated a buy from my perspective, with a projected target price of $261.57 per share. The stock is currently outperforming major benchmark indices, including Dow Jones Industrial Average and the S&P 500. Additionally, CEG remains well below the 52-week high of $352 reached on January 23rd, 2025, indicating the potential it has. This significant gap not only highlights the upside, but also it positions the stock at a discounted buying opportunity ahead of a potential stock rebound. Next, we'll take a look at the comparable company analysis, also known as CCA, that I conducted for Constellation Energy. Essentially, this analysis looks at competitors for Constellation Energy and compares their stock price and ratios towards Constellation Energy and sees if Constellation Energy is undervalued or not. The competitors I chose were Enterprise Product Partners, Energy Transfer, National Grid, American Electric Power, TC Energy, Vistra, Exelon, and Xcel Energy. Overall, throughout the analysis, we found that comparing Constellation Energy EV revenue-based implied value per share of $327.89 to its March 28th stock price, the valuation suggests a premium of approximately $122.50 over the current price. This indicates if CG was valued similarly to the industry median EV revenue ratio, its stock price would be significantly higher, highlighting strong upside potential and discounted valuation. The EV/EBITDA based implied value per share of $248.66 followed a similar pattern, suggesting if CG's enterprise value aligned with the sector median EV/EBITDA ratio, the stock price would be higher than its current level. Lastly, the PE-based implied value per share is $208.15, which closely aligns with the current stock price, indicating relative consistency while still suggesting potential upside based on earnings in comparison to industry peers. Analyzing the DCF model, which stands for discounted cash flow model, which attends to, in financial analysis at least, take a look at the historical data and use it to predict future cash flows with a discounted rate to maximize accuracy. I want to take a look at some of the limitations to my data. For instance, CEG's financial reports show changes in working capital that do not align precisely with the subtraction of the total current liabilities from the total current assets. This aims to illustrate the relationship between net working capital and its changes, but companies can sometimes reclassify liabilities and assets without directly impacting working capital calculations. As a result, predicted future cash flows were determined using the average changes in net working cash flow. Additionally, accounts payable was reported as zero on the Constellation Energy's website for 2021 and 2022, which may suggest a different consolidation method was used in those years. To complete the DCF model, a ratio-based approach was applied to estimate future changes in total liabilities based on fluctuations in other current liabilities. The historical cash flow were calculated using past financial data and then compared to the forecasted cash flows with the goal of identifying trends rather than pinpointing the exact future cash flow value. The historical cash flow data indicates a volatile trend, particularly between 2022, where it jumps from $5,906 to $9,576. In contrast, future cash flow projections suggest a reduced volatility, with the largest year-over-year difference being $689.86 after applying the discounted rate. The DCF values indicate a gradual decline over time as well, given the growing energy demands and AI advancements. With the global shift towards clean energy, the DCF model may not fully capture future trends. Along with this, new clean energy policies and increasing focus on climate change could significantly impact CEG's valuation in ways that are not reflected in the model. Despite these considerations, along with the results from the evaluation method, CEG remains a buy in my recommendation. All good companies have some investment risks, and CEG isn't unique. As a member of the energy sector, CEG operates in a highly regulated industry, with government policy surrounding nuclear energy operations and emission limits continuing to evolve, potentially restricting expansion and increasing future costs. The growing favorability of carbon-free energy driven by government tax credits and subsidies encourages more companies to adopt these energy sources. This shift could lead to increased competition in an already crowded energy market. Additionally, energy price volatility can pose a significant risk, especially if demand decreases, potentially causing a sharp price decline and financial losses. However, market trends and industry developments can help anticipate and mitigate these risks in advance. We'll take a look at one of these risks right here on the graph on the right, which shows that during COVID-19 and when it started during the initial stages around March 2020, the energy usage significantly went down. In the case of CEG during this time frame, the stock price would have also significantly went down as it directly correlates to energy use. And this is just one example of how energy stock price can go down and go up very quickly depending on the situation. However, I always advise anyone that invests in energy or the energy sector to make sure you look at market trends and evaluate the company to make sure there's no potential loss in the near future. Constellation Energy's ESG performance is rated 37 out of 100 by S&P Global and a BB by MSCI ESG and climate methodologies, placing it at an industry average range. Environmentally, CEG operates the largest U.S. nuclear fleet and invests in wind, solar, and hydroelectric power to support carbon-free energy production. It also provides custom sustainability solutions to businesses aiming to reduce emissions. Socially, the E2 Energy to Educate program funds students to projects and on sustainability and climate change, while Nuclear Science Week promotes STEM education in local communities near CEG plants. Overall, governance efforts focus on fraud prevention, data security, and ensuring operations align with company carbon-free transition goals overseen by the board of directors and the executive team. On the right, we can see some of the funding that CEG provides for schools and students who could participate in their events to help overall improve the education of America. Constellation Energy has integrated AI into its operations, notably through the partnership with Pair AI, an energy intelligence platform that helps customers track utility data, manage costs, and mitigate risks in energy consumption. As AI adoption grows, NASDAQ reports that energy demand is rising significantly, further driving demand for CEG's nuclear energy fleet. The trend aligns with government's push to reduce reliance on coal power plants, reinforcing nuclear energy as a key solution amid the climate crisis. The graph on the right suggests the same trend as it shows energy usage increasing as more and more people tend to start using AI in their daily lives.